Let's bring in Roman Schweizer. He's TD Cowen's aerospace and defense policy analyst. And obviously, Roman, these stocks have been enjoying, some tailwinds for some time, but they have headwinds too. I mean, we saw Lockheed selling off on that F-35 report just earlier this week. So is this a slam dunk to say, hey, it's draw a straight line, conflict over there equals better returns for this sector going forward?
I don't think it's, well, Kelly, it's nice to see you. I don't think it's necessarily such a simple answer. I mean, the one thing for Lockheed Martin, I mean, it does appear to be that the Israeli Air Force, the IDF, is using their F-35s to great effect over Iran. But I think one of the, certainly a knee-jerk reaction is for the group to perform better. But I think there is a risk that this campaign could be prolonged. It's unclear how long it will last. And I think the Israeli government here has decided, to take this leap, with a sort of long-planned, innovative, and well-executed attack that they've surely been contemplating for months, if not years, and that this could be a decisive action, and certainly it could spiral any number of ways.
Yeah. So this is the concern. We have, cuts coming to defense budgets. We have DOGE effects sort of within the Pentagon, a defense secretary who seems to support all these measures as well, but is also kind of a hawk. I mean, so how do you bring all these pieces together?
Sure. The House appropriators just finished their work on the FY26 bill here in the U.S. It'll be flat, but they've managed to increase investment spending, which is a key metric for some of these large cap companies that you've talked about. That would be up 4.5% year over year. The House Republicans are considering a reconciliation package that would make a generational $150 billion investment. And in 2 weeks, we're going to have a NATO summit or actually less than 2 weeks now, a NATO summit where the alliance is expected to perhaps go up to 5%, 3.5% on equipment purchases. So, unfortunately, there is a direct linkage between geopolitical unrest and spending. And, we've seen global defense spending at historic levels. So, certainly in the short term, there is DOGE risk. There is uncertainty here in the U.S. But when you look at the overall metrics, and regional factors, it unfortunately, from a personal aspect, or for many of us,
right,
suggests peace is not in the offing anytime soon.
Yeah, right. So, and I know you covered this more from a macro point of view than in following the stocks or anything like that. But can you talk dollars a little bit when we say, okay, what are the raw dollars that might be flowing to these names from the U.S., from the Middle East, from Europe, as they kind of build up their own, GDP spending on defense and that sort of thing, coming against whatever pressure may be downward and against it? If I forget who it was the other day, I believe it was one member of Congress with us who said, why don't they turn to defense and cut some from there? No, it was our market guest yesterday. So there's still this idea that we're overspending in this area and that it should be ripe for cuts in a time of limited budgets.
Sure. Certainly that is a factor out there. But, right now, depending on how you want to count it, and I will admit there's some funny math to it, but, the Trump administration has talked about a $1 trillion defense budget. Counting base and or mandatory and discretionary spending. If NATO was to go to 5% of GDP, that's upwards of perhaps $700 million in additional spending. So broadly speaking, and that is a pool from which U.S. defense companies do a very robust business selling to U.S. allies and partners globally. Of course, there's been some uncertainty about whether those allies and partners, given the trade policies of the Trump administration, will continue to buy from America. But we haven't seen any drop-off in that. And the numbers that I track in terms of U.S. foreign military sales, and that is, sort of U.S. sales of weapons to foreign partners, we are on pace for a third record year. The last 2 years have been records. Last year was $127 billion on top of $108 billion the year before. And this fiscal year, we're at a run rate surpassing last year. So it continues to be a robust demand environment. And unfortunately, situations like this, the calculus that we've seen the Israelis make, suggests that there is going to be forward robust demand.